In the upcoming Fireside chat session, we'll get the Invest India perspective. The most awarded investment promotion agency in the world, Invest India is the advisor, guide, and facilitator to every investor looking to make a home in India. They are the first point of contact for global companies whom they handhold from the day they start exploring India as an investment destination and every step of the way throughout their journey in the world's most liberal investment destination. I would like to invite Sudhir Singh, editor ETInfra, the Economic Times, to moderate the conversation. It's my pleasure to invite our guest speaker, Rahul Agarwal, Vice President, Invest India. Over to you, gentlemen.
Ladies and gentlemen, a very warm welcome to all of you on our platform. I'm Sudhir and this is the ETInfra Investors Meet, where we are talking to Rahul Agarwal. He's the VP at Invest India, and we're talking on the topic trends and future outlook of infrastructure investments for India in the post-pandemic world. A very warm welcome to you on this platform, Rahul. And let me begin this discussion by asking you, as talking from the point of view of Invest India, it's an investment promotion agency. So how do you rate the current climate for infrastructure investment in India? And that's a topic that that's the first thing that comes to our mind the moment we talk about infrastructure investments. Where do we stand? How do we rate ourselves as against some of the larger global benchmarks maybe? So how would you respond to that?
Sure, thanks, Sudhir. See, if you're honestly a pension fund sitting out of North America, aging population, you'd think that I want to put my money somewhere in a country which can give me returns for 30 years until that pension is being paid. India looks very attractive from that standpoint. Right demographics. So if you invest in India's infrastructure, those people in India will drive on road. That's what people are thinking back there in Canada or in Australia or in North America. That people will drive on the road. People will use electricity. They will use water. And if I invest in those assets today, it will keep giving my money back for 30, 40, 50 years. Right? That's what the investors were always thinking about India. What we could not give them actually, for the longest time was the opportunity to invest. Right? We were always discussed that pension funds should invest in India, and in fact, I was personally a member of the high-level committee on financing infrastructure, where we were trying to finance that $1 trillion in the 12th five-year plan, and we actually wrote there that pension funds should invest, but if we don't give them an opportunity to invest, where will they really invest? So that was the biggest change, I think, which has happened in the last 6-7 years, that we allowed that investment to really happen. We changed our concession agreements, and we invited those investors actually to come down. Having done that, I think the change post that was to give them more and more on the pipeline front, right? Can we give them more assets to invest in? And that happened, right? So we came out with, so we executed very, very well. The execution pace increased tremendously well. We allowed for interministerial work to happen, right? So you must have heard that, railways and road for the longest time did not work together, right? An ROB cannot be constructed because road is not allowing or railway is not allowing. And we actually resolved those issues. And that led to, investors getting confidence in Indian markets. The next thing on that bit is making the opportunity set bigger, right? So, today we are speaking about $1.4 trillion national infrastructure pipeline, where any investor sitting out of whether it's Middle East or in Australia or in Europe, they think 1.4 trillion is a big chunk. Can I give them 20 billion, 30 billion, and my portfolio is taken care of for long? So that's where we really stand. I think it's very exciting times for global infrastructure investors to invest into India, and India can easily absorb that capital, which probably 10 years back we could not.
Okay. So you're basically saying that looking at it from the lens of pension fund managers sitting in, let's say, Canada, we are not just a stable regime. We have taken significant steps to change things on the ground, whether it is concession agreements or things like that. So an opportunity has been created. Let me ask you very briefly. The first thing that comes to my mind as somebody who has looked at these sectors for years neutrally, is that there's so much cost and time over, and that it's unbelievable, right? So are you saying that all of that has come down now? I mean, in railways, for example, I remember there are projects that were, they came to the drawing board, let's say in 85, right, and yet to be delivered. And that used to be the case until a few years back. You're saying that those things have come down now?
I'd agree to some of it. I have a very interesting example. Let me share. So I visited Paradeep when I joined Invest India in 2016. And on the map, somebody said that there'll be this railway line which will be coming in. And it was conceptualized or introduced in the same year I was born in, right? But there was no line, right? So you are absolutely right. And my frustration was, with you, exactly with you. But I visited Paradeep 2 years back, and that line is now there. Okay. So I think that's the real change when which I have started to notice. Okay. I would not say that all has been resolved, right? I think many legacy issues have been resolved, many have been addressed, and I think we have to do more, right? We are we are a federal country. There are a lot of stakeholders we have to work with. Yeah. And sometimes, or actually I should say, many times, a lot of things are not considered when infrastructure projects are created. So I think this, and I think one more very common thing which we would have heard is that if they wanted to get a water pipeline from here, they should have done it before the road was actually built, right? Yeah. So you actually dig it up, and that's why PM Gati Shakti plan, which has come in, has a very, very interesting angle. So what we're really trying to do is that we're trying to bring everyone together. Whether it's the gas pipelines or the water pipelines, the metro, rail, road. If you're trying to do a land acquisition, why not let's all of us do it together, right? And the planning happens on a portal which is so Vizag has done that portal. So the entire thing is mapped. There are multiple layers, right from the geography of that place. Where is the water body? What is if you the quadrants and the everything of that land is captured. Who owns that land? It's all well known. And then we do the planning. It makes the life much, much easier. And when we do that, we are also informed, right? So, if highway is doing a highway construction, tells the railways that, we are doing this highway construction. If you want to do railways, say 5 years from now, just tell us now, right? We'll do land acquisition for you. We may even take environmental clearance fee.
Yeah, so that's how it should happen.
Exactly. So that's now being taken up. I feel, my view is that, I think in 5 years from now, all of these cost and time overruns should be much, much better from where we are today.
Okay. If I were to ask you to help us understand the year-wise trends in infrastructure investments that have been attracted by this country, would you be able to identify some trends for us so that we can have a clearer or a better picture of how things stand, how they've moved in the past some time? Would you be able to do that?
Sure. I think, so if you look at India's infrastructure investing, first of all, whichever regime it was, whichever government it was, we always invested more than the GDP growth of the country, right? Every government has made sure that we are investing into Indian infrastructure. What we've done, in last 20 odd years is we've tried to double our infrastructure in every 5-year period. So whether you look at the 10th 5-year plan, you look at the 11th one, from about 250 billion in 10th, we went to $500 billion in the 11th plan. In the 12th, we were a little short. I think we all know the issues, land acquisition, environmental clearance, so much was stuck, but we still did about 700, 750. And then in last 5 years, again, I think we almost doubled it. And the focus is on growing from there as well, right? On a GDP, if you look at percentage of GDP level, we are investing close to 7.5% of GDP in the infrastructure sector in last 20 odd years.
So what are the sectors you are considering there?
The entire core: road, railway, port, energy, electricity, irrigation. So all of that is what I'm considering.
Even things like water, which are part of the civic infrastructure. Okay.
Yes, I am considering that, and at all levels. So when I say $500 billion were invested in the 11th 5-year plan, which was 7 to 12, 2002, 7 to 2012. Everywhere, whether the central government invested or the state or the private. So put together, we invested about 500 billion. Now we are moving to $1.4 trillion in this next 5-year market, right? if you really put this into perspective, we are now talking about almost 10% of GDP being invested in infrastructure. See, 10% is a very steep number. I think China in its best of times invested about that much, and translated that to a very steep growth rates post that, because infrastructure translates into about 2.5 times, so the multiplier is about 2.5.
Okay.
So that's what we are also looking forward to, and our GDP is commensurate. The GDP projections you see today is in commensuration with this investment which we are trying to. And the other, it's not about the past, but it's more about the recent change also. Despite the pandemic, India continues to, the central government itself continues to invest close to $100 billion of its budget into infrastructure. Despite all the revenue laws, etc., whatever it is, but we have tried to make sure that investments in infrastructure continues, and that excites private sector in a big way.
So what was the number like, let's say last financial year, very broadly, just a rough number?
So I think we are doing almost, I think we are not aggregating at all levels, but I think we have done close to between 150 and 180, but this is my personal estimate.
Okay.
We are not I think we don't now aggregate investments of state, center and private sector anymore in the economy. But central government per se, I think they themselves have, I think, invested about between 80 and 90 billion dollars last year.
Okay, fine. And you're saying that you are hopeful that this financial year there will be growth in that number, right?
Absolutely, without a doubt.
Okay.
I think we can talk about some actual deliveries, but absolutely that's
Okay. Rahul, can you also give us a sense of what makes infrastructure projects different or unique when it comes to their analysis on a risk and return basis as compared to other kind of projects?
So thanks, Sudhir, for that question. Infrastructure projects are long gestation projects and initially require very high investments. Now, if you really try and put that on an Excel file, the cash flows which are coming later have much lesser value today. So any risk, which arrives in this entire duration makes the value of this project lower and lower. Now, if you look at, first of all, look at any project per se, and a global investor investing into that project, they look at country risk, arriving out of, various reasons, demographics, social, political environment, economic environment, etc. Then comes the sectoral risk, within there, right? So if you're speaking about roads or railways, they look at, how mature is that sector, what kind of investors have invested, and then project specific risk, it may be, in a certain region, it may be at a certain stage of development, etc. So, all of those risks actually come in. And that's how they arrive at value. So what they really do is they put all of those risks together and calculate a discount rate. And if that discount rate is high, the farther the cash flows, they become lower, right? And that's a very, very important piece for all infrastructure projects. But on the contrary, if you really look at returns for the investors, infrastructure is a very resilient asset class. You saw COVID. Despite COVID, there were cars running on the road, people were using electricity. So it's a resilient asset class, downturns, crisis, everything, whatever it is, it works. It's considered a huge inflation hedge as well. So if you really look at what globally world is talking about, you will witness a lot of investors running towards infrastructure and grabbing that to protect their portfolios from inflation. And in general, infrastructure assets are quasi-monopoly. If you have a road, you have that road. You will not have 10 other roads going from one destination to the other. So that also provides resiliency over 20, 30 years when you're investing.
Thank you for that great answer, Rahul. Let me ask you the next question, which is about, if you look at within the infrastructure space, if you want to do an analysis of which sectors do well and which are not currently doing that well. In other words, which are the sectors which are currently gaining the attention of global investors and why? Would you be able to throw some light on that for us? And also, how do you visualize this entire equation of intersectoral play, playing out over the next few years?
So I think, if I begin my answer with, this interview with, where, if you've provided the opportunities, investors have participated, right?
Yeah.
So, and I think that's the same story for interest of global investors as well. The sectors, and this is my personal belief, the sectors where we started doing PPPs or, some sort of private participation, they have actually seen interest of global investors in a big way. You name them, road, energy, specifically renewable energy. On the private side, telecom has seen interest. The entire digital and data has seen interest. So those sectors have continued to see interest from global investors, and bulk of money has actually come from in those sectors. But now, because national monetization pipeline has been announced, and we believe we can open up more sectors. We are talking about almost $20 billion worth of monetization in railways. We are building projects in water. This sector actually never existed as such in India. We always have very fragmented sector in these, but now we are trying to build that sector. So, water, railways, logistics, that's going to be a big one, because GST has now aggregated warehouses. We are trying to bring more and more multimodal logistics parks in the entire country. So I believe these should see attraction. But the legacy ones, all the road, energy, they should be the next, main capital attention grabbers for next at least 5 years. But that bucket will keep increasing from there.
Okay. It's a very fair point, no doubt. Can you also share some of the highlights of the work being done by Invest India currently to facilitate or promote investments across sectors, and where do you typically, which are the areas where you see the main opportunities for growth exist?
Sure. I think I joined Invest India in 2016, early 2016, just after Make in India was launched. Invest India was created, and I was part of the founding team. So, when we really started, and on this, and I was given this responsibility of infrastructure and financial investors, attracting financial investors to India. So we started doing that work, and I think let me just share some numbers which we came across and where we started working. There are about $120 trillion of asset under management of institutional investors globally.
Okay.
In 2020, only $1 trillion of that is in infrastructure.
Oh, okay.
So, a very small number. But the growth of infrastructure actually exceeds pretty much all other asset classes for these institutional investors.
Okay.
It means that, they are increasingly investing into infrastructure. Some countries are much ahead, right? So if you look at Canadian pensions, they are now on an average investing 4 to 5% of their portfolios into infrastructure. And Australians also, very, very close. But we believe that, a huge amount of capital is going to increase, increase their allocations to infrastructure over the next 15 to 20 years.
Okay.
So, if I just go to that 4 to 5% number, which what Canada is doing now, and they're only increasing, the allocation to infrastructure should be in the range of, $10 to $12 trillion.
Okay.
If India is able to attract just 10% of it, being a country, emerging country, huge opportunities, or, even lower, say about 7%, we are talking about almost $1 trillion, opportunity which can come into India from institutional investors alone. Rest aside the domestic capital, the capital coming in from banks, etc. So, that's where that's where we see that opportunity.
This 10 to 12 figure you're talking about, 10 to 12 roughly $1 trillion. This is for what time?
So I'm calling it an asset under management in about 10 to 12 years from now. So, about 2030, I think global investors will have about $12 trillion invested only in infrastructure if all go well, right? Globally, I'm not talking about India.
Yeah.
Now, so our opportunity, I see that opportunity as $1 trillion opportunity only for India, and national monetization pipeline is in that regard. But where we come, where Invest India really comes is, when we started speaking to global investors 5, 6 years back, we were looking for opportunities where these guys can start investing, and from where they can really grow. So at that time, we started working with likes of NHAI, likes of Delhi Metro, to create opportunities. right? So at one level, we were working with the global investors and telling them more about India. We were telling that, India is an exciting place. Your toll revenues, if you invest in roads, will grow. If you invest in energy, we have a huge gap. You'll make more money. But on the other hand, we had to give them an opportunity. We have to give them an asset which they invest in. So we started speaking with NHAI, Delhi Metro, and we started creating innovative opportunities. So toll operate transfer is one such initiative. We worked on it end to end. Right from when NHAI started creating that asset. In fact, when Ministry of Road Transport started creating that asset class, we worked on the RFP, the RFQ, the concession agreement, and then marketing that. Because unless you really tell an asset manager sitting out of Geneva or Sweden, they'll not know what is happening in India. So we came in, we started telling them about that asset class. We got very good response. It was, in some circles, people were saying that, it's such a good response that we will not invest. It will become expensive. So, and it was a great success. We got about $500 million more than what we had anticipated, right? The base price was $1 billion. We got 1.5, and it just started. There was a very similar story on the Delhi Metro side as well. We started working on leasing of coaches. So when Delhi Metro wanted to lease coaches because getting loans is probably always not the right way. It comes on your balance sheet.
Yeah.
So we started working on that model where investors can come in and invest in the rolling stock for 35 years, and they take their return by just doing the O&M of those coaches. Right now, Chennai Metro is trying to follow the same model. The Mumbai urban transport planning is, they are trying to.
Isn't that the same model as IRFC? IRFC also leases to Indian Railways, right?
It's actually different. It's actually different. So what IRFC does is, IRFC is essentially a financial lease, right? So they give money, and it's a transaction. So, but Indian Railways own and operate that asset, and for that asset, IRFC raises money from the market, which has a sovereign rating.
Yeah.
In this case, it's a bit different. What happens is Delhi Metro or any other metro company, they invite private sector to provide these coaches on a availability based payment for the tenure of the asset class, and the private sector operate and maintain the assets
as a result of bidding.
Absolutely. So they will bid. They have to bid the lowest, and then they maintain the asset. So the balance. So you actually reduce the investment amount needed for rolling stock. So that's not required. It's much more easier for government because they have to now spend only on construction and not on the infrastructure, on the rolling stock infrastructure. And then even the operations and maintenance, because if you're trying to build a new metro, say in Agra today, you have to hire all engineers for operation and maintenance. You have to train them. You have to retain them today. But if you're bringing a company which is let's say you're bringing the same manufacturer as an O&M player, it actually reduces the cost of O&M because they are the ones who have the spare parts, they have the know-how, they understand the asset well. So you can reduce the O&M from there. And also you are only paying if the asset is available. If it's not available, you don't pay. And last and the most important part, that I personally believe capital is the most important, is the costliest thing in infrastructure. It's not the construction. You give capital for 35 years. If you're raised interest, if you raise that money at 8%, then just imagine the amount of money you've paid. You've paid much more than the initial cost of infrastructure.
Yeah.
So if you can get long-term capital for that at say 6%, then you've saved much more than some pennies initially. So that's how we saw that, and so that's
like what happens in Delhi Metro case, for example. The loan that comes from JICA is at a very, very ODA. It's very, very concessional. I mean, it's very, very low rate.
Absolutely.
Hardly even less than 2%, something like that. If I'm not mistaken.
It's lower than that actually. It's a soft loan.
Yeah.
Okay. That's another part. I think soft loans are not always available and will not always be available. So we need to leverage private capital which is available, and we need to show them that India is a place which can give them an environment of low risk. So you can if you give India capital, if you give capital to India, it will be available at lower risk, and thus you please accept lower returns from India as well. Making our infrastructure more valuable. That's the kind of work we do. Plus, in addition to that, what we really ask, and I think this is something which you will like. So when we work with any global investor, we tell them that, please have any one analyst allocated to our team. right? So give us, any analyst, any young analyst, for us who we can work with. And essentially we try and feed information about India, about assets in India to that analyst, right? So our entire focus is to make knowledge available to that analyst, so that knowledge is available to that small infrastructure team of that big, of that large AUM infrastructure of pension fund. And that's where, we start making that change. It generally takes 3 to 4 years to take that small, analyst to convince, their management that, we should invest in India. And that's the success come. And I think we've done well. I think institutional capital, if you really look at 2013, 14, we used to get about 12, 13 billion. Today we get about 63, 4 billion just from private equity. And a big part of that is infrastructure assets.
Okay.
The second part about that, Sudhir, is that, if the bigger problem with infrastructure back in 2010, 2011 was that, Indian developers, Indian construction companies will make an asset, but then they have to sit on that asset for 20 years.
Yeah.
Today, if you really talk to anyone, go to any developer, they'll say, okay, I'll construct this and then I'll sell it to a private equity player, or I'll sell it to a pension fund.
They don't want to sit on it.
Absolutely. So the churning has become easy and capital is now available. That is, I believe, that is one of the strongest things for India, if you really look at, on that infrastructure side.
Okay.
And that's what we do.
Okay. Thanks, Rahul, for all of that knowledge. Really, I mean, what a pleasure it was to talk to you, and we really look forward to talk to you again and hosting you again on this platform. Thank you for your time. Please carry on. Thanks.
Thank you so much. Take care.
Thank you everyone for sharing some really thought-provoking insights with us all. Also, sincere thanks to you all for being with us today. We definitely got to learn a lot from the perspectives shared by you, and I hope our audiences too will take back with them some good learnings. My heartfelt thanks to our audience for being so interactive. Before we wrap up, I want to wish all of our audiences safety and the best of health. Thank you.